All right, cool. So in the last video, we talked about stocks. Hold on. Let me fix my background. It's not that cool. Let me fix it. Hold up. Close my door. Look, go like this. There we go. All right. What up, YouTube? Welcome back. Today we're going to be talking about preferred stock versus common stock. We're going to talk about what are the differences. We'll define it at a very simple and easy level. And then we'll talk about what matters the most to you, which is which one of these stocks should you purchase if you decide to purchase stocks. All right, cool. For those of you that are new here to the channel, my name's Barrett. I used to be a financial advisor at a couple of different prestigious firms. I practice real finance, or what we might call high finance, for about 7 or 8 years. I was licensed. I'm actually still licensed, but I'm not a part of any member firm right now. And people would pay hundreds of thousands of dollars and give me millions of dollars to manage, to get the advice. Well, I don't want to use the word advice, to get the education and information that I'm sharing with you today. And so welcome to the channel. If there's anything you want to know, if there's anything that's unclear or anything you want me to dive deeper on, drop me a comment. We'll talk about it. All right, cool. So in the last video, we talked about what is a stock. And I told you to keep it very simple. When you hear the word stock, I want you to think equity and I want you to think ownership. Stock, equity, ownership. Say it again. Stock equals equity equals ownership. Stock equals equity equals ownership. Now, when we purchase a stock, there's two different classes of stocks. There's what's called preferred stocks. There's what's called common stocks. And today we're going to be talking about what are the differences? What does that mean for you? And if you're going to buy any of these, which ones should you purchase? Okay, cool. So when we look at a stock, there's a couple of different categories of what makes a stock a common stock versus a preferred stock. So for example, when we have a common stock, we have voting rights. When we have preferred stock, we typically do not have voting rights. All that simply means is, let's say we have a stock at XYZ. Let's say we have stock, or let's say we're thinking about purchasing stock, either common stock or preferred stock, in ABC Ice Cream Company. ABC Ice Cream Company is super valuable because their competitive advantages, all of their ice cream is made with almond milk that came from some special god in some mountain. And the more you eat this ice cream, the richer you become. So let's imagine that this ice cream company is deciding we are no longer going to use our special wealth-inducing almond milk. We are going to decide to use whole milk. And we're going to allow the people who have what? Ownership, because stock equals equity equals ownership. We're going to allow the people who have ownership to vote on if we no longer use our special milk or if we should stay with our special milk. Well, if you hold a common stock, you will have the ability to vote on that business decision. If you have a preferred stock, generally you do not get the vote. That's the first big difference between a common stock and a preferred stock. The second thing you need to know when it comes to voting is the more stocks that you own, the more votes you have. So if I have 10 common stocks, 10 shares in ABC Ice Cream Company, I have 10 votes. My vote is worth 10 votes. If you have 1,000 shares, then your vote is worth 1,000 votes. So that's how that works. Now, remember, stock equals equity equals ownership. So when we have ownership in a company, if that company decides to pay out something known as dividends, all I want you to think about when you hear the word dividends, I want to make it simple for you. Think about rent. So while I own this stock, the company's going to pay me rent for holding the stock. No, that is not the super big financial firm, fancy definition, but that's the definition that you need to know to make it easy. And if you didn't see in my last video, I talked about how one of the reasons people in finance are paid so much because we complicate things with fancy words complex definitions and crazy jargon. So to keep it simple for you, when you hear the word dividend, all you need to think about is a dividend is a payment that I receive for having ownership in this company. Just keep it simple. Or in other words, they simplify it even more. A dividend is me being paid rent for owning this stock. Easy. So whenever you have a preferred stock, you typically will have what's called like a fixed dividend, right? So almost kind of like a guarantee. Like if we claim a dividend and you have a preferred stock, you're going to get $1. Every time we claim a dividend, you're going to get $1. That's a preferred stock. Okay. A common stock does not have a guaranteed dividend, but if the company does very well, you could end up getting a $5 dividend. You could get a $3 dividend. You can get a $2 dividend. In other words, let's say the company did really bad that year and they decided to give out dividend. Well, you as a preferred stock, you would get that $1 dividend that was agreed upon for your preferred stock. Whereas they may say, you know what, for common stockholders, because we didn't do that well, your dividend is 25 cents. But let's say that the company does extremely well, right? This year, they're going to do a dividend. Well, as a preferred stockholder, you're going to get that $1 dividend. As a common stockholder, you're going to get that $5 dividend. So to keep it simple, a preferred stock has, for all intents and purposes, not every time, but most of the time, it has a preferred dividend, like a set dividend. Whereas a common stock, there is no guarantee of dividends. There's no set dividend, but it does give you the ability to participate in the upside performance of the company if that company does well. All right, let's talk about another category where we differentiate common stock versus preferred stock is potential for growth. For the most part, to keep it simple, a preferred stock basically has less potential for capital appreciation. Common stock has more potential for capital appreciation. Let me break it down like this. All capital appreciation means is if the value of the company goes up because they're doing very well in the market, the common stock will see a higher raise in its price than the preferred stock. So this is just an example, okay? Just to help you wrap your mind around it. ABC Ice Cream Company was supposed to do $1 million in sales this year. They actually did $3 million in sales this year. Therefore, the share price of the common stock is going to go up by 20. The share price of the preferred stock is only going to go up by $5. That's basically what that means. Now, although I disagree with this, but you're going to hear it say that preferred stock is considered to be less risky than a common stock. And here's why. Let's say I have common stock in ABC Ice Cream Company and you have preferred stock in ABC Ice Cream Company. The preferred stock is considered a higher seniority level. Don't worry about what it means. I'm going to break it down. It's super easy. Here's what that means. If the company goes bankrupt and they have to sell all of their assets, when it's time to pay out the owners, because remember, stock equals equity equals ownership. So if the company goes bankrupt, and let's say the company goes bankrupt, they sell all of their assets, they sell all of their ice cream machines, all of their ice cream cones, all of their intellectual property, all of their recipes. And at the end of that sale, there's $1 million that they need to give out to the owners. What that means is they're going to start going down the line and paying the owners in the order of seniority. We'll talk about that in another video, what an asset class means for seniority. But all you need to know for today is this. You as a preferred stockholder will get paid before me as a common stockholder. So let's say that the company needs to pay everybody $20 and they're paying all the people in the seniority level and it comes down to the stockholders. If they have to pay all of the preferred stockholders and they run out of money by the time they get to me, the common stockholder, I don't get any money. I'm just basically up the creek without a paddle. So this is why people will generally think of a preferred stock as less risky than a common stock. However, that is a false belief. We'll talk about that in another video if you guys want to know why I say that's a wrong way to think about risk. We can always talk about that at another time. But anyways, moving on. All right, so let's talk about if you were going to invest in stocks, which one should you get and why? So here's how I would say you should get it. If you were a client of mine when I was doing this for a living, because I no longer do this, at least for corporate America, at least, here's what I would say. At a high level, all right, because everybody's situation is unique, but here's how it goes. If you're younger and if you are younger and or you are looking to build your wealth, you should purchase common stock. If you are older and or you already have wealth and you need to create a fixed stream of income, then you would choose the preferred stock. I'm going to say that again, and I want to say that with a caveat. There are many other variables in a person's financial and personal life that would dictate if they should even be in common stock and preferred stock. We're not talking about that. We're just saying if all we were looking at was preferred stock and common stock, which one should I have? Here's what I would say. If you are younger, you're looking for capital appreciation, which means you want to build wealth, you need to go for the common stock for the most part. If you are a little bit older, you already have wealth and you're trying to create a stream of income, then you would want to look at the preferred stock, right? Also, the last thing I'd say about this is who says that it has to be either or? You could also choose to invest a specific amount of money into a specific company and break up that dollar figure that you're going to invest between those two share classes. So for example, I could say, I'm going to invest $1,000 in ABC ice cream company. I'm going to put 50% or $500. I'm going to put 50% of that into common stock. I'm going to put the other 50% into preferred stock. So they're not mutually exclusive is what I'm saying. And so that's it, man. Now you know the difference between a preferred stock and a common stock. You know some of the different variables that affect it. You know why you would pick one over the other, or the fact that you don't even have to pick one over the other. All right, so that's today. So far we talked about equities, which is stock equals equity equals ownership. And now you know the difference between preferred stock and common stock. I think on the next video, we will talk about a new asset class, or maybe I'll just do a whole video on asset classes. So here's what I'm going to do. The next video, I'm going to talk about what are asset classes, what are liabilities, what's a portfolio, and how should we think about it. Let me write that down. Yeah, so next video, we'll talk about what is a portfolio, because everybody has a portfolio. Even if you're not an investor today, you have a portfolio. You just don't know you have a portfolio. So we'll talk about a portfolio. What is a portfolio made of? And then we'll talk about all the different asset classes. And yeah, that's it. I'll see you on the next one.